Good evening, everyone. Welcome to Closing Comments here on November 20th. Let's jump right into our charts and see what happened in the markets today. First up is our February live cattle. Did get a third day in a row of downside here in this live cattle market after that Monday morning rally. We did see price continuing lower here today with more traction down there below that 20-day moving average, briefly undercutting that prior day's low and finishing down there below our bear pivot at 215 and a quarter. With that close below that prior week's low, that opens the door to more downside here. As we've seen here over the last couple of weeks, we do continue to have lower highs, and we finally got another lower low here. So look for the bears to keep on pushing here. If they can keep this momentum here that we've had the last couple of days, rolling into tomorrow's session, look for them to keep on grinding lower, try and finish this week near or at the lows. Bears are going to want to keep on grinding and finish this week down here below these prior week's lows and kill off any last support and keep this downtrend rolling. Over to the feeder markets, we do have our January feeders up now. We did see another day of downside here as well, with this market closing just under that 200-day moving average. Prices not quite getting below these prior week's lows like we're seeing over there in that live cattle market, but still seeing some downside here. Expect to see the bears keep on pushing. This market is still favoring the downside. Bears are going to want to keep on rolling, trying to attack this bear pivot down here in these prior week's lows around the 310 mark. If the bears are able to push through that level and get a close down here for the week below 310, should open the doors down here to $3 and maybe be lower, as the bears will keep on pushing here with a soft close tomorrow. So look for the bears to keep on rolling lower. Next up, December corn futures with some more downside today. At the moment, this range has been pretty sticky over the last few weeks, but price is starting to look a little heavy. Today's action finishing down there at the range lows, just off of that bear pivot. If we take a look here on our little bit higher time frame, looking at this weekly chart, we can see lots of rejection here over the last 4 weeks, as this market has tried to make some runs up there towards that 437 to 440 area. A lot of resistance up there each time we pressed up into those areas, and we've been seeing this market get pressed back down there to those multi-week lows here, right around this 426 spot. Look for the bears to try and take some of this momentum from the last couple days into tomorrow's action. If they are able to push down here below this range low at 426 and get a close down here below that 50-day average as well, could open the door to more downside here in this corn market. At the very least, we should see it start to press down here towards 410 if we do get these multi-week lows to break. Maybe keep this thing range bound here between about 410 and 430, as that has been the price range here for about the last 5-6 months or so. And but at the moment, looking like this thing's a little bit top heavy, looking like we're gonna have to press through the bottom end of this range, and we could see a nice little flush here by the bears. If we don't get any more downside, and tomorrow during the day session we see this thing start to rally back up, expect this range bound action to continue and this market to remain sticky around this 430 mark. Crude oil prices with more downside here today. Prices briefly coming up into the prior day's range and getting rejected, finishing the day down there near the lows. Down there below 59, finally got a nice little breakdown here below our bear pivot, and continuing to see that downside here in the evening session as we are nearing the $58 mark. At the moment, this market continues with its slow grind lower here, following this downtrend channel, as the momentum is still favoring the bears here, but just pretty choppy, low volatility environment. We could see more chop. Look for the bears to kind of let up on the selling pressure as we push down here towards 57.5. Tomorrow's action might be a little bit supportive as we visit the low end of this trend channel. Look for this low volatility choppy action to continue. If we do get more of a flush tomorrow and break down below the bottom end of this channel, we could see this thing start to pull down here into the mid 50s. So look for the bears to keep on grinding this crude oil market lower. And last but not least, our equity markets with some volatility here today. Finally got some of the downside rolling. We've been seeing a little bit of downside here over the last couple of weeks, but a nice breakdown day here. We did have that big gap higher this morning following NVIDIA's earnings, but that gap open was sold hard today, finishing down there anywhere from 1.5% to 2.5% lower across these indexes. Pretty big distribution day, pretty heavy volume selling here, very clear selling action. If we do get some more offers down here below this tariff day low from the 10th of October, that was the Friday going into the weekend, where President Trump threatened some tariffs. If we do get some continued momentum down there below that, look for this thing to start getting marked down here towards this 200-day moving average. We could see the selling pressure continue to grind into Friday's session. Bears are in control here. As we discussed throughout the early part of the week, now is a good time to start getting defensive and raising cash. and today we finally got that big break confirming that. And so look for this downside to continue. Should lead to a pretty good buying opportunity down here in some deep value areas. Not looking for any bear markets or anything to come from here, but definitely needing a corrective move here. Somewhere in the 8 to 10% range would be a very healthy pullback for this market. So pullback down here to the 200-day average would be more than welcome and a very healthy sign for this market. And we should see some good dip buying opportunities here over the next couple of weeks. But at the moment, I would stay out of the way and let the downside take care of itself here while this market corrects a little bit. That's all we got for tonight. Thanks for tuning in this week. We will catch you over the weekend for our Week 47 Market Watch. Thank you.